We're going to take that to Sandip Agarwal, a fund manager and co-founder of Sowilo Investment Manager. Sandip, hi. You know, we talked about the acceptance ratio, and I talked about it this morning as well, because if there's huge retail participation, then the number of shares that you own that could be bought back, which is called the acceptance ratio, will drop. What would you say is the advice for those who are holding the stock and for those who are not holding the stock?
No, so, in this industry, the cash generation is substantial and companies are left with no option but to, either give dividend or to do share buyback. And that is what the company is doing. So what company is doing is in the best interest of both investors and for the company. Now, as far as you already explained in great detail that the acceptance ratio will be limited. So if you see overall market cap, also it is 6.26 lakh crore rupees as of yesterday, and you are doing 18,000 crore buyback, so it is around 2.5–3%. So it is not a very big number, but that is the only way company has the option to distribute cash, and also the artificially whatever the ROE and ROC looks depressed because of huge cash balance, that to improve that. So I think from that perspective, this is the only option. Now, acceptance ratio and everything is dependent on what kind of tendering happens and all those things. And also there is a time period, as you rightly mentioned, of 3–4 months. So I think, we always look at the industry from a fundamental perspective, and fundamentally we all know that industry is going through a low growth phase. So these are actions which I don't think can change anyone's investment, decision based on that.
Sandip, so my specific question, and let me come back to that. What do you do vis-a-vis the buyback if you hold the stock, and what do you do if you don't hold the stock?
No, so this is a no event kind of thing for the investor in my view, because as already mentioned, either 1, 2, 3, 4% is a very small thing which can happen because the size of the acceptance ratio will be in that range. So I don't think it is any event. This buyback is not an event. It is an event for the company because it will help their ROEs to look better than earlier.
Okay, so then let's talk about it from the perspective of the company. Sandeep, we were speaking about it in the run-up to this board meeting and the decision. Were you yourself surprised at the size of the amount that they're going to buy back? Because it's the largest ever, and certainly larger than the street was penciling in. So one, what does that mean? And two, is this likely to spur other large companies which are not necessarily seeing tremendous growth either to distribute similar amount of money or to pull out a similar amount of stock?
No, I am not at all surprised because, it is almost like a huge gap, and the cash balance was at 45,000 crores. So only 40% is distributed, 60% cash still is a huge cash to hold on, and it will still have a negative impact on the ROE, ROC of the company. But what happens is that in technology sector, if you see, generally all the companies try to keep 8 to 12 months of salary for any uncertainties, although those kind of situation has never happened in the past, but they have a tendency to keep 8 to 12 months of salary at least with them in the cash. And I think based on that, this mathematics has been arrived this time as well. So I don't think the quantum is big or the premium is big. I think that is what minimum anyone will expect. And I think, even other companies in the sector which are there, because, there is no such acquisition opportunity in the sector itself. You can deploy maybe $100–200 million, but there are no billion-dollar opportunities at a reasonable price, because whatever is a good asset, they are trading globally at a very, very high valuation. So there is no choice. Secondly, if you just do some acquisition, then, there is a key man exit or something, then you will end up losing money and depressing the ROE fundamentally. So I think this is the right decision by all the companies, and all of them, whichever are sitting on huge cash balance, in my view, they will come and do the buyback, because there is one of the options to return money to the shareholders.
Yeah, and well, the street looks at this action very well as well. Sandeep, thank you so much for taking the time out. I know it. I mean, you're in your vehicle and all of that, but really nice conversation. Thanks for this.
Thank you.
Yeah. Okay. So that's the view on Infosys. Frankly, this 10 minutes tell you everything that you need to know when it comes to Infosys, except for whether technically it's a good buy or no. We'll get to that conversation as well in just moments from now. Let's welcome in our